Bring out your dead. Bring out your dead. I am feeling like shit. But enough about me. Welcome, everyone. What day is it? It's Wednesday, the 17th of December, all day. You join myself and Mr. Michael Brown for the morning blast. As you know, or as you should know by now, this is a very candid roundup of what's been going on in markets and what to look forward to today in markets. It's all recorded live, so there will be trigger words and lots of swearing usually. Hopefully we had a bit of value to your day, put a smile on your face. As usual, nothing discussed on this podcast is trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. And speaking of the devil, how are you?
Well, very good morning to Ryan. Good morning, everyone. I'm not too bad, mate. Not too bad. 3 days of the year left to go. I'm very sorry to hear about your plague. I didn't realise we could transmit illness through a podcast, but seems like it's possible. So well, I'll send someone round to paint a red X on your door later on.
I think it's more you coughing all over me when you were drunk the other night. But then I'm not on anything from this.
Just fucking hell.
There we go. Oh God, it's going to be an awful show.
Well, most are, so.
No, true. Shall I crack on with Clive Lambert's update?
Are you sure you can get through it?
1 sec. There we go.
Take a deep breath.
Right. So, what's been going on in markets and the next big levels to watch from our good friend Clive Lambert at Futures Techs? I'll start again.
Oh no. Fallen at the first hurdle.
A few big moves seen around the traps as the volumes get thinner into Christmas. S&P tested a short-term Fibonacci level at 68.33 yesterday. Buyers stepped in at 68.17 and a half. So a couple of early supports there to watch today. Nasdaq, that found dip for buyers yesterday at 25,074. A mixed bag on this side of the pond, with FTSE giving back all of Monday's gains, although were nicely bid overnight. Bund futures, they were testing resistance at 127.75 to 79 this morning after posting another hammer yesterday. Cable, that got up to 134.55 yesterday, but it's seen a big drop this morning on the inflation numbers, which obviously Mike will be coming on to shortly. Eurodollar also saw some upside rejection yesterday, has been offered overnight. Gold, the yellow metal, posted another high wave candle yesterday, but it's been overnight. I'm going to have to dig into the book and work.
I was going to say, I don't know what that is either.
No idea, but yes.
Is it something to do with Elliot and his waves?
I hope not. If not, Clive can get stuffed. It's a doji, basically, apparently.
Oh, thank you, Clive.
Silver surged China while we were sleeping up to 66.65, new all-time highs. Platinum also bid again, exceeding the 2011 high at 1911. So now the levels at last printed in 2008. It got up to 1955 in the Asian session trade for what it's worth. Palladium, obviously similar catalysts to platinum. See what I did there? Similar.
Very good. Very good.
Right? That was all me as well. That wasn't Clive. That was me. Also made new year-to-date high yesterday and is eyeing some big Fibonacci levels higher up, notably 1769 and 1811. Brent and WTI, obviously the oil benchmarks, heading in the opposite direction to metals, with Brent eyeing support at 58.40 to 58.50. Obviously, there's a bit of a glut going on, and also with potentially a falling relations regarding the Ukraine war. We could see it's not unforeseen that Russian crude comes back to the market in the not too distant future, but we'll wait and see. The recent rout in Henry Hub, US nat gas made the stalling with only some signs of life from bulls since Clive wrote the last update yesterday. Gas oil, which is basically diesel over here in Europe, hit 605 and a quarter, low from October that we mentioned yesterday. So all eyes on that. EU carbon continues higher up to 88.37 this morning as Clive went to print. Wheat also seems
all time, as certain people would say.
It's all time indeed. Wheat, the ginger stepchild of the agricultural commodity space, also saw weakness, hitting support at 508 to spot 4, where we bottomed in mid-October. And finally from Clive, soybeans filled the gap at 1,063, and that's been the gap that we've been talking about for about 2 weeks. So happy days on that front. And that's it.
Cool. Good stuff. Thank you very much indeed. Ryan, where should we start this morning? Let's go with the UK inflation numbers because we've obviously had those about 90 minutes or so ago. And it is good news on the inflation front here in the UK, which makes a really nice change to be able to say that. Headline CPI coming in at 3.2% on a year-on-year basis in November, a big chunk lower than the 3.6% that we saw in October, fair way below the BOE's expectation of 3.4% as well. And more pleasingly than that, the metrics of underlying price pressures also pointed to the risks of inflation persistence continuing to ease. Core CPI, that came in at 3.2%, down from the 3.4% we saw previously. That's the slowest pace since December of last year. While the services CPI metric, that came in at 4.4%, down from the 4.5% that we saw in October, and also the slowest pace since December of 2024. And also just worth mentioning that food inflation came down to 4.2% from 4.9%. The BOE watched that very, very closely because it is quite a significant input into consumer inflation expectations. So good news on the inflation front.
Say something though.
Go on.
Rachel Reeves is already claiming that this is her story and that it's because of her and it's good news. But I would say arguably it is because of her. It's because more people have got less fucking money to spend, so they're cutting back, so prices are coming down.
You know what? I fully agree with you. And actually, Rachel Reeves, you can have credit for this one. Yeah. It is all due to your policies. And as I said to Batesy and to Ryan Littlestone this morning, when you're actively trying to destroy the demand side of the economy, of course you're not going to have any inflation. Good luck trying to explain that to the Treasury, but there we go. Now, just to get ahead of anyone saying it, yes, inflation's running at 3. The target is 2. We all know that. The point is the direction of travel is now very, very clear in that we are moving back towards the 2% target. And more importantly than that, we are moving towards that target at a faster pace than the Bank of England had expected in their November monetary policy report. As a result of that, a 25 basis point cut from the MPC is pretty much nailed on tomorrow. I certainly wouldn't be surprised if we got a second straight cut at the February meeting either. It was also raised to me about half an hour ago that there is also now the potential that we see potentially some votes for even a 50 basis point cut from the Bank of England on Thursday, tomorrow lunchtime.
Who said that?
They will remain nameless, but there is Catherine Mann, and I mean, she could vote for 100 basis point cut, to be completely honest, and it wouldn't be a surprise.
Okay, so she could vote for 50, but we ain't going to cut 50.
No, don't get too far ahead of yourself, Ryan. But Andrew Bailey will be pulling on his Santa outfit and rustling around in his sack and delivering a Christmas rate cut.
You would love him to deliver his sack onto you, wouldn't you? Oh, I bet that's what gets you going, isn't it?
As soon as I brought that up, I was like, this is a hide into nothing, isn't it? And yeah, that's where you went.
Over his knees.
Oh, Jesus Christ.
What is happening?
I'm dying now. Right. Away from that horrible mental image, we also had the latest US labour market data yesterday, which pointed to headline non-farm payrolls having risen by 64,000 in the month of November, as near as makes no difference in line with the 50,000 consensus. And that came after employment fell by 105,000 in October, although that October decline was pretty much entirely driven by a decline in government payrolls, which in turn was driven by, firstly, the government shutdown, and secondly, by those deferred DOGE-related resignation packages. So not entirely worth worrying about. What is worth worrying about is that 64,000 jobs that the US economy added in November. It entirely came from the healthcare sector. So if you take out healthcare, the US economy added no jobs in November. And actually, if you take out healthcare and look even further back, the US economy has basically added no private sector jobs for the last 6 months or so. So clearly, the labour market in the United States continuing to stall. Unemployment also ticking to a new cycle high in November of 4.6%. That was up from the 4% that we saw in September. Yes, a degree of that is due to increased labour force participation, with the participation rate now at 62.5%, up from prior 62.4%. But nonetheless, the message is very, very clear that the US labour market is continuing to weaken. Frankly, that's nothing we didn't really know already. For the FOMC, that is likely to keep them leaning towards delivering further rate reductions and getting that Fed funds rate back to neutral, with the next cut potentially coming as soon as the January meeting. Although, of course, it is important to note that we will be getting the December jobs report ahead of that January FOMC decision. So there is more data to come on that front. In terms of other bits and bobs from yesterday, we did have, just to round off a few other bits of data, we did have the latest PMI surveys from pretty much everywhere. Rather grim in the Eurozone, with the manufacturing PMI at an 8-month low, the services and the composite metrics falling to 3-month lows each. Here in the UK, though, a bit of a brighter picture. The manufacturing PMI at a 15-month high, while the services and the composite metrics rose to 2-month highs, both at 52.1. That was largely, though, I think, a mechanical rebound. What I mean by that his sentiment was so depressed, and rightly so, in both October and November in the run-up to the budget. Now that the budget is out of the way, you see a little bit of a relief bounce, so to speak, as some of that uncertainty lifts. And lastly, in terms of data, we did have the latest US retail sales figures out yesterday. While headline sales were actually flat on a month-on-month basis in October, the control group sales metric, which is basically the basket that feeds into GDP, as close as you can get to that, sales there actually rose by 0.8% on a month-on-month basis. So although the labour market is weakening off, there is very little sign of consumer spending restraint at this moment in time. Moving away from the data in terms of other bits and bobs that we had yesterday, on the trade front, Bloomberg citing sources noting that the US is threatening to retaliate against EU companies over the digital services tax. This retaliation could include fees and or restrictions on the provision of foreign services. Of course, this comes, well, it's been a very, very long-running theme, but I think we mentioned last week that the EU is now raking in more money in fines from US tech companies than it is in tax from its own tech companies, which is clearly unsustainable, and rightly so. The United States want to try and redress that balance. Speaking of the US, we had quite a wide-ranging interview from Treasury Secretary Scott Bessent yesterday. He said that he believes, or he guesses, that both a Fed chair announcement and a Supreme Court ruling on the IEEPA tariffs will come in early January. Let's hope he's right, because I don't think anyone really wants to be dealing with that with 2.5 weeks to go of the year. He was also talking about how there's going to be 1 or 2 more Fed chair interviews this week. And in fact, the Wall Street Journal later confirmed that one of those interviews is going to be current Fed Governor Christopher Waller, who will be interviewed by President Trump today, obviously Wednesday. The Wall Street Journal sources noting that Waller is, quote, a heavy underdog, not only because he lacks the personal relationship with Trump that obviously both Kevin Warsh and Kevin Hassett have sort of nurtured, but also apparently Trump is upset that Christopher Waller voted for a 50 basis point cut in September 2024. Trump apparently sees that as politically motivated and disloyal because he voted for such a significant cut 2 months before the election, which is obviously complete and utter nonsense, but there we go. Going back to Scott Bessent, he was also talking about tax refunds, saying there could be up to $150 billion worth of tax refunds in the first quarter, and that those refunds could be somewhere between $1,000 and $2,000 per household. And he was also talking trade. And he said that China has so far done everything that we negotiated, which is clearly good news on that front. Moving away from that into the tech space, the CMA here in the UK, they are investigating Alphabet, aka Google. They are alleging that Google has abused its dominant position in advertising technology and are considering their next steps while monitoring international developments. To put that into something resembling plain English, I think what that means is the CMA are going to wait and see what Europe does and then probably do the same thing. Yeah. Sticking with the tech sector, Apple, according to the information, they are going to expand their iPhone lineup from the current 5 models to 7 models by autumn of 2027. Quite why they're doing this, I don't really know. I saw a stat. Sorry?
Different colours.
Well, maybe that's what it means. But I did see a stat the other day. It was something ridiculous, like 60 or 70% of all of the new iPhones, what is it, 17, 16, 17, whatever it is, 60 or 70% of all of the new ones that have been sold are the Pro model. So, actually, I would say there's there's not really that demand for a diverse product lineup, but there we go. Apple seems to be going down that route anyway. OpenAI, they have hired George Osborne, yes, former Chancellor of the UK. He is going to spearhead their global Stargate expansion. Tell you what, it's a fucking shame that OpenAI aren't listed, because if that isn't a sign to short the stock, then I don't know what is.
Quite. It does feel like a number of things are coming together where desperation seems to be running around OpenAI. We've got like the vesting cut, which we reported on yesterday. You've got obviously Sam Altman getting very, very defensive when anyone asks him about these mega deals. Turn out to be just basically glorified letters of intent. You've got Oracle kind of losing money hand over fist on OpenAI's kind of proposed investment, etc. Although
they also seem to be losing their sort of competitive advantage. They had that sort of first mover advantage when everyone went, oh my God, ChatGPT is amazing in Nov 2022.
Yeah.
But, now there's all this competition. And obviously we've all seen the charts where Google's market share in AI is growing and growing.
Yeah.
And of course, Google have got that incumbency bias. If you or I are sat there in the pub and go, I want to find out a bit of information, what do? You Google it. And if Google put AI into Google, then job done. They've got the market.
No, exactly. And anecdotally, obviously I signed up, when ChatGPT came out and paid for it. And it was only last week, actually, it might have even been the start of this week, when I got billed again for it. And I was like, well, hang on a second. I've actually not used it in a month because I've been using Claude or something else. So I've actually cancelled my subscription.
We don't like Claude over there.
Oh, I love a bit of Claude. I'm Claude's little spoon.
You do you. I'm busy with Andrew Bailey.
Oi, oi.
Last but by no means least from me this morning, here for corporate M&A news. Luckin Coffee, of course, the Chinese brand, they are said to be considering a bid for Blue Bottle, which is a franchise of Nestle. The reason I bring this up is because apparently they were interested in Costa Coffee here in the UK, but apparently their interest in that is waning. And it's interesting to see that because, of course, the current owners of Costa are desperately trying to get rid of it. So I guess it's only a matter of time before we know whose luck will be in when all of this sorts itself out.
I saw that coming. That was massively telegraphed.
Sorry, I got a red card from News Corp for that one yesterday, sadly.
Oh, so it's not even a fresh one. It's not even a fresh brew.
No,
It's
fresh brew. Fuck me.
Yes. Right. Thank you for that. On that highlight.
Has Zach bothered to turn up today?
He has. Let me welcome the devil. Let me read out some choice headlines from the overnight news roundup. Again, this is just a few bits that I've picked out. So do subscribe to the overnight news roundup for the full gamut of headlines sent directly to your inbox. And we've just been talking about OpenAI, so let's start there. Amazon is in talks to invest more than $10 billion into OpenAI to sell more chips and computing power. The deal will push OpenAI's valuation above 500 million. Big tech's AI arms race got more intense on the back of this, assumingly. This seems to be another one where Amazon is going to invest into OpenAI so that OpenAI can buy more Amazon products. So the circle jerk continues.
Let me just find my elephant picture and tweet that out before you carry on.
Exactly. If anyone doesn't know, that's an elephant sucking its own cock. Waymo raising raising at $100 billion valuation. Waymo is in early talks to raise money at a valuation of at least $100 billion. The round could be for several $1 billion, possibly more than 10. Self-driving is coming back in a big way after a little bit of a faltering start. President Trump, he's ordered a total blockade of all sanctioned oil tankers entering and leaving Venezuela. A major escalation against Maduro. Oil prices took a small bid on the news. We watch and see how that materializes. Obviously, we did have I think it was the start of the week even, or maybe over the weekend, where the US actually boarded and took control of a sanctioned tanker. So he has promised more of those. So hopefully some more nice footage to watch on social media. Meta X integrated circuits shares jumped almost eightfold on their first trading day after another blockbuster Chinese debut, after more threads made a splash earlier this month. China's chip rally is certainly heating up on that. SpaceX, they've told employees the company is entering a regulatory quiet period, taking the rocket maker a step closer to an IPO slated for 2026. The $800 billion company is getting ready to go public. And as we've said many times, on this show, our prediction is this will IPO on the Texas exchange, but we will see. UK inflation, obviously Michael's covered that, fell to its lowest levels in 8 months. I won't go over that again. Medical supply giant Medline raised $6.26 billion in its IPO, achieving a valuation of over $50 billion, one of the biggest IPOs of the year in the US. JP Morgan, they've withdrawn nearly...
I reckon. Sorry, I was going to say just on that.
Yeah, go on.
Random thought. What did they raise in the IPO?
$6.26 billion.
I reckon, and I haven't got the figures in front of me, but I reckon they raised more in that IPO than we raised in London combined all year.
Oh, God, that's depressing.
I will double check that, but I'm pretty sure it wouldn't be far off.
No, I wouldn't make. Yeah, I make you right. To be honest, I wouldn't be surprised at all. I'm actually struggling to remember $1 billion deal.
Well, yeah. The only thing we got was a bloody canned tuna manufacturer.
Oh, that was it. Yeah.
Says it all.
JP Morgan withdrawn almost $350 billion in cash from its Federal Reserve account since 2003 and plowed it into government debt. The bank is defending itself against rate cuts that threatened its profits. Moving to California, regulators found that Tesla deceived customers by falsely implying cars could drive on their own. We've been saying this for years. The company has 90 days to comply. Got there in the end. Elon's full self-driving marketing just got a bit of a reality check, much needed.
It reminds me of the fella who built that electric truck and then just pushed it down a hill in the promo video.
Yeah, whatever happened to him?
Probably in nick, isn't he, if we're being honest?
To be honest, he's probably running $1 billion company the way these things seem to.
Wow, yeah, true.
Some Trump administration officials are privately raising doubts about NEC director Kevin Hassett's next Fed chair. The race to replace Powell is getting more and more complicated. As we mentioned yesterday, in fact, it's gone from 100% just a one-horse race to potentially a three-horse race, but we'll see. Germany's parliament is approving more than $50 billion in military purchases, 50 billion euros, in military purchases, rounding off a bumper year for the EU's largest nation plows ahead with massive rearmament. Obviously, companies like Rementhal and that are going to be the first to get in their fair share of that. Global coal use, that hit a ceiling and is set to begin a slow decline over the next 5 years as renewables and LNG gain ground. That's according to the IEA. The beginning of the end for coal, maybe proof's in the pudding, but the rate that China are making coal plants, I'm skeptical. Ford is taking a massive $19.5 billion write-down as it pulls back from electronic vehicles. We kind of reported on this yesterday. Huge knock from them. Japan's exports, they rose for a third straight month, further supporting expectations for a historic rate hike. And this week, Japan households are piling into risk assets as inflation erodes cash savings. And finally, from me, before I hand back and cough my guts up, Chinese stocks rose sharply as enthusiasm around tech shares returned, fueled by massive gains in recent IPOs. The correction may have been short-lived. That's the correction to the lower, at the downside, obviously. But back to you.
Cool, good stuff. Thank you, Ryan. In terms of today then, in 7 minutes' time at the top of the hour, we get the latest IFO sentiment surveys out of Germany. Business climate expected broadly unchanged at 88.2 in December, marginally higher than the 88.1 that we saw last time out. Beyond that, the data docket is pretty barren, in all honesty. At 10 o'clock, we get the final read on Eurozone CPI for last month, although both headline and core metrics are expected to remain unrevised, with headlines staying at 2.2% on a year-on-year basis. And of course, in any case, the ECB are very much set to stand pat on policy at their final meeting of the year tomorrow lunchtime. Moving into the afternoon, we don't have anything in terms of US economic releases today, although we are due to hear from the Fed's Bostic, Williams and Waller as we move through the day ahead. Of those three, Waller's comments are going to be of most interest, not only given that he's in the running for the chair job, but also given that he has been, well, to give him some credit, very much ahead of the curve in terms of the rest of the FOMC over the last year or year and a half. So be interested to see what he has to say about where the Fed funds rate is going to be going next. In terms of other bits and bobs on the docket, we do have a 20-year Treasury auction. That's at 6 o'clock this evening. $13 billion worth being sold off there. And then at 9:45 tonight, we get third quarter GDP numbers out of New Zealand, where the economy is seen growing by 0.9% on a quarter-on-quarter basis compared to the 0.9% contraction that we saw in Q2. And just lastly from me, on the earnings front, it's worth bearing in mind that after the market close, we do get earnings from Micron. Of course, the AI theme remains under the microscope at this moment in time. So Micron's earnings will be interesting, not just for the company in question, but also in terms of the potential impact on sentiment more broadly. But that is all from me this morning.
Wonderful, and it's all from me. Hopefully I'm here tomorrow, but remember me if I pass away during the night. But Michael, thank you so much as always. Pleasure.
And before the vultures start circling, he hasn't got anything worth having. So
I haven't, and definitely you don't want to be chewing in my bones.
Oh.
Right, on that note, whatever you're doing today, have a great one. Take care.